Hello, 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 and a massive hello to everybody. How we all doing? This is 50 pips, rocking and rolling here, not making any trade calls or recommendations, as you and only you are responsible for the trades you may decide to take, and the fact they're in here means you've read, you understand, you accept all the disclosure disclaimers here on the website and everywhere else, understanding that we're just performing some live technical analysis in a learning context for educational purposes only. So good to see everybody here. Again, we don't have a fixed schedule. Anything's on the table. You can ask me anything you want, and we'll just try to pay it forwards a little bit. Again, since today marks the 7th anniversary of the Twitter handle, so me being on Twitter, and strangely enough, people are still following. Okay, so we'll do a little bit of an impromptu session. So, guys, as usual, first come, first serve. Just ask me if you want to review any chart, if you want to talk about trading for a living, if you want to talk about working out, how to sear a steak, whatever. I don't mind. Anything's open. Good to see a bunch of old guys, old timers in the session. Hammer time. Good to see you live, man. Yeah, sure, Jimmy. Could you please review the Canadian dollar? Do you have a specific question on the Canadian dollar? Any specific time frame you're looking at? Anything you're focused on? Any trade you're managing, or just a general review? Yeah, so here what's happening on the Canadian dollar. So here we're on a weekly. So again, just for reference point, right? So in case anybody's new here, um, we are the three moving averages are always the same on all the charts. It's green, gray, and black, 50, 100, and 200, and they're all simple moving averages, right? Okay. Hey, Sham in the house, man. Been a while. Great to see you live. Great to see you live. I'll keep your question. We'll go through it in a second. Okay, so I'll go through one question one by one. So basically what we're saying, so here this is a weekly, right? So um, just to go back, when we were going really um, pressing aggressively, right? Crude was puking, etc. What we said is we had a couple of areas where we looked for it to stall, right? This was the first cluster of resistance where we said, okay, we could get some stalling here, and you see that this is one of the first places where the market attempted to sell off a little bit, right? But then we got a very aggressive bid, right? And we continued this press higher. Does that make sense? Off that zone, right? So once we pressed higher, the way we looked at this move, or the way we would look at analyzing this move, or in any case, is the fact that this break above means that likely this 68.1 is going to break, right? We expect this area to break, so we're not interested in being very active here. Our next level to focus on is the 68.6, okay? So you see price comes off and it reverts pretty aggressively off this area, right? Very aggressive move. So that's just on the monthly, Jimmy, going back to give you a little bit of context, right? If you see on the weekly, again, clearly you're not going to trade that monthly chart, or at least we're not. But you see on the weekly, you had this very aggressive close, right? And then the market started to get short and we've retraced here. So here we're pretty much retraced in this broader upward trend. And we've tried to pause a little bit at the 50, right? And now we're kind of hovering inside a very big chop zone, which is the 50 and the 100 WMA. This area is an interesting area because we've got a lot of clusters of support or resistance inside this zone. So the way we would look at this is that if this is going to bounce, we'd expect it to bounce. Let me clear this. Somewhere around here, you know, these 25, 20s all the way into this 100 DMA. Now, should we start to get daily or weekly closes below this 100, then we would expect that this would accelerate aggressively to the downside. Most likely this 200 attracting, in line with all these previous areas of support. So this is a pretty key test for it today. So the way we'd be looking at it is this is a key level either for a complete break lower or some kind of a bounce, right? The bounce here, because this area has been such an important area for so long, you'd expect sellers to try and cap it here in the 129, right? And if that lets go, you'd expect it to come all the way back into the 135s. So this area is really what we would call pivotal for Momo and flows, pivotal for action, especially in terms of daily close, weekly close, etc., etc. Hey, Walking Trade, man. Good to see a lot of you old-timers popping in. Does that answer your question, Jimmy, or were you looking at a shorter time frame? That's good? Okay. So, bear with me. I'm just trying to go through all the questions to make sure I don't miss anybody. So, Sham, good stuff. Good to see you. I mean, the question is an interesting one. The question is, any tips on how to identify a change in trend? Right? So we've been talking for a long time, right? So you'll know that the only answer I can give you is it depends, right? So I'm going to try and be a little bit more constructive. What I would say is it's depending on your time frame, right? There are a lot of different things that can help identify change in trend, right? And it really depends what setups you're looking at, what time frames you're looking at. So some people will be looking at moving averages. Some people will be looking at daily ranges. Some people will be looking at bigger ranges. Some people will be looking at fibs, right? So it really depends, but maybe a quicker answer, which I know it's not what you're looking for, is key breaks and holds outside of ranges or key support or resistances, right? And but I think probably the most common way to look at it, that most people will look at it, is just using some moving averages, right? That could be anything like the 50, 100, 50, 100, 200, and when they cross, right? But I prefer to use that in conjunction with bigger support or resistance or ranges. But it's a tricky question to ask like that unless it's a practical example, right? And usually if you look at moving averages, things will tend to lag. But here, as a simple example, you see once we start basing, right? Once all the moving averages start to cross back and they start to line up with the shorter one above the higher ones, then it means that trend's starting to play back up. But again, that's it's a simplistic answer, right? We'd have to look at a specific example or something to put in a little bit more context. Does that help you at all? Yeah, Hammer Time, we can't complain, right? This year we've had plenty of volatility, and as traders, the only thing we can ask for is volatility, right? So we're very happy. It's been a decent year, sure. I have a question about, hey Troy, how's it going? I have a bunch of questions about time frames. There's a ton of talk, obviously, about it, but not much on using weekly charts. For me, they seem more reliable. What's your take? Well, as a general rule, the way we look at it, again, in a simplistic approach, is, theoretically, the higher the time frame, the stronger the signal, right? However, most likely, the higher the time frame, if you're just strictly sticking to that time frame, the wider your stops and the wider your TPs, right? So then the question is, do you want to use the bigger time frames to generate ideas and then trigger them on shorter time frames to try and get tighter entries or not? Or are you just comfortable because of the way you trade, just sticking on the weeklies, and you trigger on weekly and you manage everything on the weekly, right? But as a general rule, what I would say is there's no right or wrong, and there's no perfect chart. It depends what you're trying to do, what your setups are, what kind of leverage you're using, what your risk tolerance, etc., what time frames. But in general, every chart is going to work the same way. The patterns are the same, the indicators are the same. As a general rule, what I would say is the shorter the time frame, the tighter the levels, but probably the more fake outs you'll get, and the wider the time frame, the wider the levels and the less fake outs you'll probably get. So it's a question of how much how you scale your trades, how you manage them, how you size them, right? But clearly trading those just without trying to find a different way to getting tighter entries on higher leverage is going to be tricky, right? I'm not sure if that answers your question. Oh, so we got Donald Trump asking a question. So how important is it to focus on your health in the context of putting yourself in a condition to succeed in daily habits or routines? Yeah, sure. I mean, that I think whether you're looking of trading, or you're a plumber, you're an Uber driver, you're whatever, right? Whatever job uh, you're uh, you're taking. Yeah, Debbie. Whatever whatever job you're doing, I think focus on your health is key, right? So I wouldn't look at it, say that it's special in terms of trading rather than anything else, because everybody tends to disregard and not focus on their health until it's too late, or until they have a nasty surprise themselves or a nasty surprise around them. And then they start focusing on the health, and sometimes it's too late. So in general, prevention is better than cure, right? Now, as it relates to trading, right? I think it's particularly important also in terms of physical health, in terms of posture, etc., right? Right? So again, I think it's really important, because as traders, you tend to be, if you don't know what you're doing, if you're too levered, you tend to have a lot of stress, right? Again, don't be the guy in front of 25 screens drinking Red Bulls all day, saying you're on meds. It's stressful. That's just you're trading too big, right? If you're trading responsibly and you know what you're doing, there's absolutely no reason to feel any kind of stress whatsoever. It's just any trade you take, you should be comfortable with the consequences, good or bad, and it's just one out of the next gazillion trades you're going to take in your life. So it's really neither here nor there. But I would especially focus on, making sure you move and you active, because being sitting all day is not good for your back. Well, sitting is not good for you, full stop. But especially slouching is not good for your back. It's not good for your wrists. It's not good for your elbows. It's not good for your neck. So it's important. I prefer, most people know here, I work standing up. I'm on a standing desk. I think it makes a lot more sense. A walking trade in the house. So I'm just going through the questions. Okay, I do a pretty good job most of the time in FX trading, but one day, with no reason, I do something and I give back what I made. I don't know if I can avoid this these days. I find it very hard. Now, that's I think something pretty much everybody deals with, and everybody has to deal with or experience, especially at the beginning of their career, right? Sorry, I'm just managing a trade. That's the 2 seconds. That everybody experiences in their career, right? Now, I would say that the majority of the time, hey man, that is simply a function of either not respecting the rules or trading too big, right? So if you're not trading too big, and if you're respecting the rules, there's really no need for you to give it all back quickly, right? So if you, as we say, eat like a bird and poop like an elephant, that probably means that you've broken the rules. So there's two options. Either you've been trading really responsibly, following your rules, etc., and then one day when the market goes against you, you break all the rules, right? And in that case, the solution is very easy. Just do what you were doing before. Don't break the rules, right? If, on the other hand, you make money because you don't have a plan and you're just shooting from the hip with, no idea of stop, of TP, just getting lucky, then it's normal that you're going to give it back. So there's no hope there. So you really better stop and make sure you have a plan. So which one of the two is it? Because the answer will probably be very different. So A, you have very specific set of rules and you stick to them, and then sometimes you just don't stick to them, or you just don't have any rules and sometimes you make money and then you lose money. That's there. I can try and expand, but you have to tell me which one of those two it is. Jimmy, I'm more than happy to review any chart. I'm not going to make any trade calls here. I don't want to make today about trade calls. A. Okay, well, A, the question is then, if you're not over levered, right, and you've got a plan and you're respecting that plan and you're trading according to plan, and then some days you just get crazy, right, and you just lever up when you shouldn't, or then that's just something to do most likely with you not wanting to be wrong and your expectations, right? You can't expect to always win, and you can't expect to never give anything back. So the best thing to do is really to have a very fixed set parameters of what your daily limit down or weekly limit down or monthly limit down is. And when you reach that, you just have to turn off your broker, log out, and stop trading, right? And if you can't do that, then nobody's going to be able to help you, right? You have to find the power within yourself to just stop. Now, is that because it means too much to you? Is because you don't have realistic expectations? Then that's a tricky one, because there's a lot of possible things that go into play. But another thing could simply be because you don't understand the context, right? And it means that you have a general understanding of the trade setups, but then when the market is at turning points, right, you just get out of hand. And then that means then probably twofold: work on improving your understanding of the context, but still have those fixed rules on when you just simply have to stop trading for the day, for the week, for the month, right? Troy, yeah, it's a trade-off on that question on the weekly. Personally, I think if you're trading longer term, really, I would not go wider than the weekly. I know a lot of people like to trade. I think the daily's fine. You've got a very good mix, even 4 hour. But if you want to go stronger, daily. You could always look at the weekly and then use the daily for entries. But, you could easily just size up, lever up properly for a weekly strategy too, right? So it depends what you're looking for. But as much as I know about you, etc., I think the daily's fine, right? But it's just a decision, right? Okay. Okay, going through the questions. What are the considerations I should take in account if I want to trade bigger in lot size, for example, after I made 100% return in 12 months? I would assume that if you made 100% return in 12 months, either you're exceptionally talented or you got lucky and you're trading a bit too big, right? So if you're trading strategically, let me put it this way. If you're trading, you made that trading under 1 to 10 leverage, right? Or single digit leverage, just stick to what you're doing. Stick to your sizing and just increase your lot sizing as you increase the account size, right? If you made that trading in the 1 to 20, 1 to 30, 1 to 40, 1 to 50, 1 to 100 leverage, then I would suspect you really need to scale back your size, and you should be very careful because, you know, the maths catches up with you. So sooner or later, that's an accident waiting to happen. Again, just trying to help. Okay. Going through the questions, going through the questions, going through the questions. I'll get to all of them. My pleasure, Troy. What the hell is going on Euro? Sure. I got another question on that from somebody else who I think I saw come into the room before. Question was also along the same lines. What the hell is going on Euro? Why is Euro why is Euro pressing so high? So again, Euro's not even up. You know, it's up 0.75% on the day. So all things being equal, it's not really you know, it's not like it's a crazy move, right? So we reviewed CAD at the beginning of the session, so you can go back and watch the recording when I post it. So what's going on Euro? So Euro's here in holding a little upside rotation, right? So last time we left off, we were talking about these tight ranges here, right? And we're saying that we felt that the closes below, we're going to get a tag of the 112. Pretty much 2 times into that area, right? And then that if we get daily closes below, we'd expect price to go to 1050s. And if it closed above, we'd expect that 1340s to attract again, where we'd expect to see some selling interest, right? If that let go, then those highs would attract, those stops above those highs would attract, right? So here what's happened, so we did get that move back lower. We couldn't close below the 112s. They got defended. And what's happening? Well, we're holding this channel to the upside, right? So above 1340s, we expect to see more selling coming in here. Clearly, it's not happened with the way ES has been trading, right? And so again, what's the path of least resistance? Well, the path of least resistance is the market trying to come back up and clear some of these stops here, right? So the 2 levels we have to the upside are this 114.97, you can call it 115 mark, right? And the next level going into the 117.10s. So those are the levels we have to the upside. So it's tricky to call here because it depends what's happening towards the end of the day. If one would assume ES bounces a little bit into the close, starts to bounce, you'd expect Euro to come back down probably towards that, you know, at least 20, 30 pips lower. We'll have to wait and see. But basically the way I'm going to be looking at this hasn't really changed, is that as long as we don't close back above this level, right, we'd expect it to try and come back and normalize into mid, which is about these 1340s. Right, let's do it this way so it's a bit clearer. And if we get a daily close above 1497, so 115, we'd expect it to possibly try and really put some squeezy action on and try and tag the higher level. So it's probably really going to be a question of what's happening here on the ES. Is the ES going to puke? Is the ES going to rally, right? You know, if the ES continues to puke into the close, this will likely take out more stops to the upside. If the ES rallies, we'll kindly see a move back towards more neutral territory. So that's what I would be looking at. The daily close is important. That 1497 will be important also from not only a daily close perspective, but should we close next to there also from an opening perspective on Sunday. By the way, thanks to all you guys who retweeted out the link. I really appreciate it. So, okay, more questions, more questions. Going through, is that okay? Does anybody have any comments or any questions on Euro? My pleasure, Debbie. Hi 50, if you had unlimited access to computers and developers, are there any strategies, patterns you'd like to backtest and get stats on? Not really. Yeah, it's computers and developers aren't that expensive to backtest, right? So you can it's it's not like 15 years ago FX low, right? So I don't think there's anything that I'd like to have precise. Hey, Radu, how's it going? I don't think there's anything I'd need to have precise stats on that I don't have stats on already, right? No. But I think stats are interesting, but it depends what kinds of stats. Some stats can be misleading, right? It's important to know what you're looking at, and it's important to know how to analyze them properly. And there's a lot of companies that offer subscription services for all kinds of stats for very modest fees. So it's not as difficult as it used to be. Okay, more comments, more questions. Just going, hey man, how's it going? How's it going? How's it going? No, I'm afraid I can't answer that question. I don't know. Um, Maybe I know somebody in here could probably answer that, so I'm going to talk about it out loud. The question is, I've been thinking of replacing my 8 screens with 2 big TV screens, right? So I know somebody in here who will remain nameless, but if you want to chip in, you can chip in, has something like that. So I don't know. I think it really, at the end of the day, you're talking about screen real estate, right? So it depends what you're trying to do. And, there's a lot of screen management systems, so it doesn't really matter. I think some people prefer to have the 2 screens or 1 big screen because it's cleaner, because you don't have to deal with the frames, right? Some people still prefer having the independent screens because it's easier to share off different screens. So I think it depends a lot what your requirements are, right? Yeah, and again, I think less is more, sure. But I mean, in terms of the same real estate, the question. So, would you rather have two 20-inch or 140? I think it depends on you and what you need it for. Also, don't forget, it's also in terms of screen location. It might be ergonomically, it might be easier depending on how close you're standing to the screens. I'd be careful about, a lot of people jumping with really big screens, but if you're standing very close, I don't have experience, but I don't think it's going to be ideal. You're probably better off with some smaller screens. So, also how much space they'll take up, it depends. Sure. But again, as Troy was saying, also, I think a lot of people at the beginning um, kind of go overboard and they think, you need to have a gazillion screens, right? Don't go overboard. You don't need to have a gazillion screens. I think what's important to understand is what makes sense for you to look at and what do you really need to look at for your strategy. Because if you've got a lot of screens just to have stuff there that's not useful to you, that's just going to distract, it's probably overkill, right? And it could be detrimental to your trading. Remember, there's a very big difference between um, need to know, useful to know, and potentially damaging to know, right? or just yeah, exactly. Uh, Darwinia, how do I choose a practical strategy? Are you talking about a strategy for you to trade on DarwinX, or are you talking about a trade for you to trade and to get investors, or are you talking about how do you choose the strategy to invest in? Yeah, Debbie, I agree. Because if you're choosing a strategy to invest in, then I would stay tuned. If you're signed up on the 50 Scouts link, we're going to do a webinar to talk about the index and stuff in the coming weeks. That'll be useful. You'll get a link for that automatically if you're on the 50 Scouts link, right? If you're trading through them, you'll get a link to that. If you're talking about your own strategy, I would really not try to focus on creating a strategy to attract investors. I would focus on trading your own strategy, right? And if your strategy is profitable, then you'll most likely have investors. Now, one thing to keep in mind is, hey, Luca, how's it going? Of course, if you're trying to get investors, scalping strategies are not going to be ideal, right? So I think anything, if you're trying to close positions at plus 1, 2, 3, 4 pips, the moment you get a little bit of slippage, it's not going to be good for investors, so it's not ideal. But I would stick to what you do and your strategy, right? It's funny because everybody's saying, oh, I used to have 6 screens, now I'm down to 3. I've got 5 screens, but I only need 2, right? That's the usual thing. You tend to see people kind of scale up on screens and then they realize they've got far too much, right? Actually, I'll tell you one thing I was talking about with some of the guys in the weekly webinars the other day, which is an interesting thing. Something I try to do at least once a year is I try and go back and look at, my desk, how my screens are set up, post-its, notes I may have laying around, whatever, right? What I have up on my screens. And I go back and I look at is how much is on here that I'm actually using and how much is on here that is just on here, but I'm used to seeing there, but I never really look at it, right? And this is an exercise I pretty much do every year, and I've been doing it for decades, right? And it's crazy how you always find stuff that creeps in there, right? Whether it's some kind of post-it note that you keep there that you thought was interesting, but then when you think about it, you haven't looked at it for 8 months, right? Whether it's something that you have open on one of the screens that you think is interesting, or a stock that you were following, or an index that you were following, or a pair that you were following for a little bit and then you don't follow anymore, you don't even trade, but you just got used to seeing it there, right? Or a time, whatever. So I think it's a really good yeah, exactly, it's spring cleaning, right? It's once a year. Tidy up your desk, tidy up your mind, tidy up your thoughts, tidy up your screens, tidy up your charts, right? And what I'm doing here this year is my big spring cleaning. This year is I'm getting rid of some screens, right? Trying to keep it more compact, trying to keep it more ergonomical, and it's. I think it's good to always work on that. Going back to being healthy in general is always good to work on being efficient, right? Efficient, 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 or as efficient as you can be, right? Okay, thanks, Debbie. Excellent. I almost lost track. Okay, good stuff. Any comments, any questions, anything anybody's looking at? Anything anybody wants to? Again, nothing's off limits. You can ask anything you want. Any charts? I think we got a good mix here today. Okay, not really in terms of trading strategy, but more in terms of I didn't expect to get into the top 10 Darwins. Now I did it. Maybe I got lucky, but now I'm not sure if I should change something. The plan is still to use my profits to increase my trading equity, not planning to withdraw the profits. Well, again, I don't know if you're signed up through the 50 Scouts link or not, because remember, if you're signed up through the 50 Scouts link, you've got a free session with me to review your Darwin. So that would probably be the easiest thing, because then we can review your Darwin, and we're talking about something concrete. In general, if your strategy is working and you're placing in the top Darwins, it means you're doing something right, right? So if your scores are good, and you're placing and you're getting capital under management, the important thing I would say is just keep on doing what you're doing, stick to your plan, stick to your rules, and as your account size grows, just adjust the size to make sure that your leverage is and position sizing is always the same. It's important. It's really important for the stats, etc., is for you to stay as stable as you can on the positions you're taking and on the leverage you're taking, right? So you really want to keep that stable. Now, I don't think you should go crazy. We were discussing that also the other day in terms of adjusting your position size to your account size every day. I'd probably tweak that, depending on how much you're levered, etc. I would look to tweak that, once a quarter or even once a year if you're not highly levered. So, but again, if you're on the 50 Scouts link, just email me your Darwin name and strategy, and you've got a free Skype call with me to review your strategy. Sure. Yeah. I mean, which one are you looking at, Troy? I mean, here I think probably the one of the most interesting ones is to see here how we play, how we react on Euro JPY, right? As we said, we got sold off exactly where we thought it'd get sold off here, and now this is holding. This is a really key test. So so be very careful, because you could see a lot of velocity inside move in these areas, right? Two-sided action, but right now this is a tricky one because it likely means that the range is really expanded. So unless we're outside of this area, this is a lot of chop suey zone. I mean, it's a big area, right? It's a big area, but it's going to be very, very tricky. But clearly here, it'd be interesting to see if we can get some little bounce action. If anything, I definitely would not be wanting to be getting aggressively short here. GBP JPY you're looking at. Sure, let me get this up. It's not one of my are you looking at a specific time frame on that? I mean, here we've had, a little bit of a puke here. Now, again, it's one of those tricky ones, right? You've got that previous support we tried to rally hard again outside of, right? And that previous breakdown point that's really holding. And the question is how to behave here, right? Now, it's very different to, and again, keep in mind you've got Brexit risk, but it's very different to USD JPY or Euro JPY because it's far from those lows, right? So it's probably, is it eyeballing? Is this broken to 61.8 or something, or is it about there, right? So you see you've got a lot of fib confluence areas coming in. So if anything, if it's going to bounce, this is probably a place for it to try and catch some kind of a bounce. But it's a bit of a tricky area. Yeah, on the weekly, remember, I think we looked at this in the weeklies, Troy. You see it's trying, look at it on the monthly. You see where it's holding? It's key zone, right? It's trying to hold that area. So most likely, right, if it gets traction below here, then it could be sayonara, baby, right? But as long as it holds here, this could easily just be a lot of chop on Brexit and on BOJ, and then we decide. So it's a tricky one, right? That's a tricky. You start to get bigger and bigger ranges, and then it starts to be tricky to play inside the ranges. But I would still focus on trying to play for what happens 80% of the time, not 20% of the time. I'd always try to play for the healthy play. I would not be trying to chase lows. I would not be trying to chase highs, and keep that broader range in perspective. Does that make sense? Okay, cool. You signed up through the 50 Scouts link, but you didn't know you had a Darwin review? Well, you didn't read the page you signed up on. Yeah, just email me your strategy name and your Darwin, and we'll set it up. Don't worry. Okay, sure. Okay, so any comments, any questions? Hey, Luca, how's it going, man? Strong? Good shape? Good stuff. Okay. So I'm just trying to clear through some questions. Any other comments, any questions, any charts we haven't looked at? Yeah, ES is behaving, fairly nicely. So, we were long off those lows for the reversal back into the descending trend line. I think probably some of the first ones to be calling in January that we're looking for 21s to get tagged, right? 2100 to get tagged. Right here, we've got this full rotation all the way back into the 2100 and that descending trend line. Now, is it surprised we're getting a bit of a healthy retracement? Well, absolutely not. Do I think this is the end of the world and we're all going to burn in hell and the ES is going to 500? Not really, right? So this is just that, we're going into end of month flows, etc. Our range hasn't changed. Just a reminder, the range we've been talking about for a long time is 2100 2050. Oops, somebody's going to get executed for daring to disturb during a webinar. So 2100, 2050, and 20,000. We held all these upside rotations in a fairly technical manner, right? So we really, can't complain on any of these moves. So yeah, that's my gin and tonic ready. Not yet. After New York. So right here, where are we? We're we've hit the top side of the range, right? We've seen some profit taking coming in. As it was extended, we got fairly quick velocity of move, right? Back to the downside into mid. So again, if it's going to bounce for everywhere, we'd expect it to bounce here, right? So that's where I tweeted, bulls make money, bears make money, and pigs get slaughtered. So if you're paying attention, that means don't start shorting 2050s, right? And here, a daily closes below the 2050s. We'd expect it to try to come back down into the 2000. Daily closes above. We'd expect it to try and rally a little bit and, see if it fails from higher, if we start to build some more downside Momo, right? But for now, all you can say is, it's failed at a fairly classical level. It's made it all the way back into the mid-range where it's supposed to go, and it's stalling exactly where it's supposed to stall. Now, if it's starting to break down, keep in mind you're going to have a lot of different support zones going into the 2050, right? But right here, and no surprise, we've been talking about it on Twitter all week, right? I said, we take out those Friday lows, last Monday's lows attract. So again, it's just the market trying to retrace here. Now, what's interesting here is look at it on a 1 hour, right? Or look at it on the 4 hour, or look at it on the 15-minute, whatever you want to look at it on, right? If this holds, you'd expect to see some more covering in. And, I would not be surprised to see this come back into, we got an open gap, 2070s, coming right back into those 2070s into this range, right? Now, if it holds close to here all the way into the close, they might try and jack it down and get more downside traction. But, the longer it can't hold these lows and it starts to make its move higher, a lot of people start to take profits, and we could easily see it right back into that level. So it's still a bit early, it's 12:40, so we'll have to see. But, so far it's nothing too crazy is happening, right? Nothing too crazy is happening. Debbie, you're off. Have an awesome weekend. Okay. So Debbie, Donald Trump is trying to steal all your questions from today's webinar. So either Donald Trump is from the webinar and has used the fake name, or he's been pirating, listening in with some illegal link. So I'm not gonna answer the questions. But anything else anybody wants to look at? Anything anybody wants to focus on? Yeah, sure. Let's look at cable. What's going on cable? Okay, so cable, we discussed that, you know, it's a lot of Brexit risk, right? A lot of wheeling and dealing, and that we felt that the edge was at the extremes, right? Not in the middle of the range. So, you know, there was clearly chances to get short on failures here, chances to get long here. I know a lot of people, I didn't trade it, but I know a lot of people traded the long side here, right? On this move. Fairly nice area. I did not trade this, this move up at all, right? I didn't trade it at all. So right here, if anything, you know, the tricky thing on a day like today is that it can continue to easily squeeze higher. But all things being equal, you know, I'd much rather look for opportunities to be tactical for a healthy retracement here to try and get aggressively long, right? It's a key area. It's going to be interesting to see how we close today, and the overnight open and the Sunday open is going to be very interesting. But clearly, this is a super interesting resistance zone. It's a tricky on Friday flows because everything might want to squeeze a little bit more. They might try and jack something up into the open, but Euro looks a little bit more bid than cable. It's a tricky one, but I think it'll be interesting to see the Sunday open, sure. What do I think is going on in AUD USD? Sure. So AUD USD. So I think, Stephen, I think we discussed it in last Sunday in the free webinar session, which should be on YouTube. So if I remember, we discussed it with Rags, and basically our thought process was that we didn't see why we'd want to get long here. We thought that the RBA, or, you know, is not going to be too happy, and we'll probably start seeing either through the data or them talking it down, or with the RBA next week, we'll start to see some weakness, or at least we'll start to see some profit taking. People, you know, not too comfortable holding an awful lot of, you know, awful lot of upside left, right? So here we have this key pivotal zone, and it's gonna be interesting into the RBA next week, right? Because you see how we've repeatedly failed at these highs, right? We came back here, we put in a little healthy retracement, and then bam, all the way back down again. So as long as we hold below this whole area, right, this pivotal zone, which is a key support, it could hold very, very heavy, right? So we'll have to see how this plays out. I think if it takes out some more downside, keep an eye for, you know, all these possible areas of support and this 50 DMA. But especially if this lets go, then I would not be surprised to see this trading in the 22s rather quick, 72s rather quickly, right? So, you know, upside in the 78s, downside in the 72s, but I think here, you know, the risk reward is still to the short side for now. Hey, Karen, have an awesome one. Talk to you soon. Does that answer your question, Stephen? Okay. Any comments, any questions, anything anybody wants to look at? Yeah, gold. What's going on gold? So very aggressive move to the upside on gold, right? As we said, you can make a case for this going up or going down. We thought it was going to stay a little bit heavier than this. We're not expecting this aggressive ramp. Again, in hindsight, you can easily argue that this was a no-brainer. It kept on hugging this 50 DMA, kept on making higher highs, higher lows. So it was a no-brainer that I was going to try and tag the upside, right? As far as we're concerned, we thought it was less of a clear read because of all this aggressive selling that was coming here. So we suspected that this was just going to stay very, very choppy here and that this was going to follow the ES, right? So if the ES went for new highs, puke. If the ES puked, going back to the upside of the range, right? So not a lot has changed because you see that effectively ES is still in range and gold is still in our range. So here it's a similar thing. It's all about the equities now. We'll have to see what happens. If the equities bounce, we'll expect to see gold coming back down a little bit. If the equities completely puke, you'd expect gold to take out that 1300. But so far, pretty much still in range. Does that make sense? Right? Yeah, it's been a tricky one to trade, right? Again, I'm sure there'll be people telling you it was such an easy one, but I think it's been a tricky one to trade. Okay, any comments, any questions? Is there any trade I currently like at this time? I like ES for back into the 2070s, right? Okay. But again, I don't want to do any trade calls here. I don't want to make it about trade calls. Okay, guys, we've been going for about over 50 minutes, I think. I'm going to cut it short because if not, the YouTube takes ages to upload, right? So, guys, thank you so much for following on Twitter. Thank you so much for stopping by and sharing some time with me. It's been a pleasure. Wishing everybody an awesome weekend. Talk to you guys soon. As always, thanks for all the support, and see you guys soon. Take care. Bye-bye, guys.